Hello everyone, I'm Pratap here. We are at third practical session of lesson 9. We will practice in finding fresh zones, tested zones, violated zones, and some examples related to the zone achievement pro gap. It is also called as professional gap. And we will also look into how to trade with zones by calculating risk reward. So these are the some of the topics. Let us focus in this practical session. Let's get into the charts. Let us look into this chart. Crude oil. You know that supply demand zone price action concepts can be applied in any market. We can apply in equity market, we can apply in currency market, we can apply in commodities market. So crude oil comes under commodities market. And let us identify a zone. Here we have a rally candle, and then we have three base candles. This is the first, second, third, and again we have a rally candle. RBR pattern we are identifying. So let us draw the zone. So we are already having a shortcut for drawing the zones. Or another option is you go to this menu here, first, second, third, fourth, fifth. The fifth one, you just click. There you can find a price range. This is what we discussed earlier. So click on this and then we can draw the zone. So we have a demand zone. Because prices haven't reached into this zone. After the leg out, prices were moving down, they came down, but price did not enter into this zone. After that again it went up. So such kind of zones are called fresh zones. The prices after the leg out formation, if the prices did not enter into that zone, such kind of zones are called fresh zones. And at the early stage, in the beginning stage, fresh zones are tradable zones. If prices are already entered into this zone, don't get into that zone in the early stage. Once prices entered into this zone, what does it mean? Already it consumed some of the institutional pending orders. A fresh zone, institutional pending orders are not yet consumed. That is what the meaning. Okay, now it is a fresh zone. After that, let us see what's happening. The prices are coming down. See here. Now prices entered into this zone. Now this zone is no more a fresh zone. Then what kind of zone it is? It is called tested zone. Once prices enter into this zone, it is called a tested zone. What is the concept we learned? Demand zone is having the ability to push the price up. The institutional pending orders are having the ability to push the prices up. That's why once prices entered into this demand zone, see the big rejection. It pushed the price up. This is called rejection. See, we have a long wick. Prices moved again back. When we have such a long wicks for the candles, that means these wicks are just away from the demand zone because prices moved up. Such kind of candle formation after entering into the demand zone is called a rejection. Please remember this point. We will discuss about rejections in our next phase of our training program. After that, prices went up, again came down. See, this time what happened? Because it is already tested, maybe this time it might have consumed majority of the institutional pending orders. Just below these candles, there may not be much institutional pending orders. They have given a push, went up. After that, the supply again dominated the demand, and this time the zone is completely violated because prices went down below this demand zone. Now this demand zone is called violated demand zone. Violated demand zones are not valid demand zones. They are no more valid. Okay. Who is responsible for making this demand zone down? The supply zone, some supply zone, right? So, what is the immediately available supply zone when prices are going below this demand zone? The immediately available supply zone. So, we have a rally candle and then we have two base candles and then with a gap down, prices went down. So, now let us draw this supply zone. So, I am changing the color. So, this supply zone is responsible for breaking this demand zone. Because the supply zone made this demand zone violated, this supply zone gets an achievement that is called zone achievement. What kind of achievement it got? Violated opposing zone, VOZ. We have learned VOP and VOZ. VOZ means violated opposing zone, and another one you learned violated opposing pivot. Let us focus only on VOZ because that is the one. If any zone gets a achievement VOZ, violated opposing zone achievement, then such kind of zones are powerful zones. Next time again prices turns up, if they go up and they are entering into this zone, and this zone is a tradable zone because it got the zone achievement. Always remember the zones that are having zone achievement, violated opposing zones are called as tradable zones. So can we trade directly? There are some other concepts also you will be learning in the next phase of our training program. All those concepts together, finally you can confirm that zone is a very good zone or maybe it is a weak zone. Some more parameters also you have to analyze. So in this, so far in the first phase of the training program, the foundation concepts you have learned. All these foundation concepts will help you in identifying the best zones that can give you a very good profits. I already told you, you have to watch and observe until you complete second phase of your training program. Which zones are giving results, which zones are not giving proper results. You have to observe. That is what the exercise. That's why I have given almost 3 to 4 weeks time only for the practicals point of view. If you sincerely follow my advice and every day if you observe the market and every day if you are practicing these concepts, by the time when we start the second phase of the training program and the entire second phase of the training program easily you can understand. By the time you complete second phase of the training program, you will be in a position to trade without taking any other person's advice. Okay, now what are all the concepts we have seen? Initially we have seen this zone is a fresh zone. After that, prices entered into this zone. Now this zone is called as a tested zone. So from fresh zone it is changed to tested zone. Okay, once a zone is tested, second time is it safe to trade this zone? No, it is not safe. There are higher chances of violating this zone. So that is what happened. Second time when prices entered into this zone, easily the prices passed through this zone. Because the prices passed through this zone, now this zone is called violated zone. And which zone is responsible for violating this zone? It's opposing side zone, opposing zone. So which is opposing? Opposing means the zone that is resisting to this zone. Basically the opposite side zone. So the opposite side zone is for a demand zone, opposite side zone is a supply zone. So this supply zone gets the zone achievement. Once this zone gets a zone achievement, then such kind of zones are called tradable zones. Next time again price entered into the supply zone, there are higher chances of getting success. Just only based on the zone achievement, you cannot take a decision. If zone achievement is not there, easily we can tell the zone is not a tradable zone. Zone achievements gives a confirmation that it is a tradable zone. The other concepts you will be learning altogether, finally you can confirm this is a good tradable zone or not. But time being, this is a tradable zone because it got the zone achievement. Which zone achievement it got? VOZ, violated opposing zone. So all these concepts we learned earlier. Now in the live charts you are experiencing all these, whatever the concepts you learned earlier. Okay, hope you understand what is a fresh zone, you understand what is a tested zone, you also understand what is a violated zone, and also you understood what is a zone achievement. Earlier you learned all these concepts in bits and pieces. Now all these concepts together we have seen in a single chart. Okay, once a zone is violated, now that zone should be deleted from your charts because it is not meaningful to keep on this chart. Yes, you can keep on the chart just to check the zone achievement and just to understand these concepts. You can keep for time being. Once you understand the concept, yes, you know that because of this demand zone, this supply zone got this zone achievement. Now it is confirmed. After that, you can delete this demand zone. Why we are deleting? Because it is violated. Violated demand zones are not valid on the charts because they are not tradable zones. And let us look into one more example. But in this example, what we learned? First time it is tested. That means fresh zones are tradable zones. Maybe if you would have brought and after somewhere you sold, you would have got some profit. But maybe you might have got a minimal profit here. That is a different story because we are not getting into such kind of discussion so far in our course. That we will see all those things in detail in our next phase of the training program. Now you should ask a question. If a zone is not a fresh zone, is it valid for trading purpose or is it invalid? That means when prices are entering second time into this zone, shall we reject that zone? In the earlier stage of learning your concepts, yes, you have to reject that zone. But in the third phase of our training program, third phase, that is advanced concepts and advanced strategies, there you will be learning a concept called high liquidity zones. Those zones will be testing again for several times. Such kind of zones can be tradable even if it is tested. Maybe second time we can trade, third time we can trade, fourth time we can trade. How many times we can trade? Some techniques you will be learning. After learning all those techniques, you will understand. Is it safe to trade or is it not safe to trade? If you feel it is not safe to trade, by learning some techniques, at the time you will realize. But until you learn those concepts, remember, you have to trade only the fresh zones. But don't fix this point. Most of the people are making this mistake. They always fixed this point in their mind. If it is not tested, then that zone cannot be tradable. This point is valid only in the early stage of your learning. Once you become expert, once you got a good experience, then you have to understand what kind of zone supports multiple tests. Those concepts I am going to teach you in advanced strategies session in the third phase of our training program. Just to show you, there are some zones to support multiple testing. Let me open another chart. Now this time I am selecting Forex trading, that is US dollar and Indian rupees. So stock market, supply demand zone price action concepts can also be used in currency markets. That is what I said earlier. It can be used in equity market, it can be used in commodities market, it can be used in currency market, that is forex market. Everywhere it supports this concept. That is the beauty of the supply demand zone price action. Now look into this chart. This is US dollar and Indian rupees. So 1 US dollar now is trading at 83 rupees 22 paisa. Okay. Now let me draw a zone. We have a rally candle, we have a base candle, we have a drop candle. So this is a supply zone. What is the high? 83, 3190, high of this candle. 8332. Okay. Now at this moment it is a fresh zone. At this moment it is a fresh zone. See the next candle? Now prices entered into this. Now this is no more a fresh zone. It is a tested zone. And if you are thinking after the first test the zone will be failed, if you think like that, that is a wrong understanding. There are certain zones, special zones. How to identify? All these things are advanced concepts you will learn later. You don't worry time being. But time being you have to understand in the initial stage only, you have to understand the only once if it is a fresh zone only we have to trade in the initial stage because you are not experienced person at this point of time. So that's why you have to fix that point in your mind for the initial stage. Remember, for the initial stage. Later on, you have to look for the zones which are supporting multiple tests. See here, prices again went down. Again, prices entered into this zone. So, second time. This is the first test. Again, this is the second test. Prices entered. Now, again came down. Again, prices entered inside. This is the third time. Again, prices came down and again went. This is the fourth time. Again came down and went fifth time. Again came down and went again. Sixth time. Again went up. This is the seventh time. And again came down. And this is the eighth time. Now this zone is violated. So how come this zone supports multiple tests? Because it is a high liquidity zone. What is high liquidity zone? I will explain later in the advanced concepts. But time being, remember that word. The reason why I am showing, I don't want you people to fix in our mind only fresh zone only we have to trade. Otherwise it is not valid. Many people, I have seen many people, always they make this statement, which I don't accept. The reason is they are not aware of this concept. There is a concept called high liquidity zones, which support multiple tests. If you are in a position to identify such kind of zones, then those zones will give us more opportunities, more trading opportunities. So now it is violated. But I already explained you. If prices go beyond this, again come back and close inside this zone. Such kind of zones we can call it as a pierced zones. Pierced zones are almost equivalent to violated zones. No doubt in that. But why these pierced zones we are keeping? Because during the advanced concepts you will be learning some strategies like bull traps and bear traps. If you are able to identify the pierced zones, at the time it is going to be easy for you to identify the traps. Pierced zones also you can delete from your chart because the prices went beyond this zone. We are keeping on the chart only because to find some traps. But otherwise, pierced zones also invalid zones like violated zones. Only the name is difference, violated and pierced. But otherwise, both are invalid zones. If it is price closed above this, we are completely removing from the chart. If price again came back and closed inside this zone, we are keeping this zone on the chart for temporary purpose. To understand what's really happening on the above this particular zone. Once you land those bull traps and bear traps, you will get better clarity. Okay, what is the main goal of studying this chart? There are some special zones that supports multiple tests. Just to keep that point in your mind, I am just showing you this chart. But otherwise, at this point of time, as per the first phase of your training, even as per the next you will be learning second phase. Even as per the second phase of your training program, you have to trade only the fresh zones. Please remember. Even though some zone supports multiple tests, still you accept only fresh zones until you learn advanced concepts. So please do not forget this point. And the most important point you should remember, there are some special zones, we call them as high liquidity zones. They support multiple tests. This is such kind of zone. Okay, now let us look into one more chart. Gold. This is what we discussed in our first practicals. We have already drawn a demand zone on that day. Let me open gold chart. Exactly, this is the day. When was this candle? On 10th November. I think 10th November, we have released our first practical session. We have practiced. So at the time, we have drawn this zone. But observe this zone carefully. We have a rally candle. We have two base candles. Again, we have another rally candle. But how this rally candle is created? A leg out with gap. There is a leg out with gap. So this is an indication to the professional gap. If prices are moving away from the zone with a gap, such kind of gaps are called professional gap. And when there are professional gaps, mostly, I'm not saying always, but mostly, those zones are having strong order flow. Strong order flow means there is a more institutional pending orders in that zone. In such kind of zones only will be created with a gap, a leg out with gap. When there is a gap, what happens? Maybe within that gap, the prices come and then immediately you go. Already most of the gap we have drawn, but still there is some more, a small gap. See here? Now let me extend this zone till this gap area in the next candle, leg out candle. A small, let me close that gap. Okay, now the gap is closed. Now you have clarity. Because it is having a gap, there are higher chances Just prices may just enter into this and then again they move. Those higher chances are there. See, always remember the place where the pending orders are there, huge pending orders, the moment price enters, immediately again they push the price up. Now let us see what's happened in this stock. I mean, this is gold. Gold prices, see here. Now the price just entered into this zone, the gap area, whatever the gap area here, and immediately see the rejection. Sometime before I told you what is a rejection. The wicks, the price go and again it will push up. There is a rejection. This rejection indicates the order flow in this zone is very high. See, there are many rejections will be there for all these candles you are seeing. They are not important. Rejection from the zone is important. Always remember. Otherwise, you may learn these concepts in a wrong way. Because this candle is having a rejection, this candle is having a rejection, this candle is having a rejection. You may think there are so many pending orders are there. That's why they are pushing up. But to confirm there is a pending order, the zone should be there. So you have to compare the rejection with respect to the zone. Without a zone, you cannot look into the candles, the wicks. Without a zone, all these candles, you have to call them wicks only. You already learned in our first lesson. Every candle is having two wicks, upper wick and lower wick. So all these, they are lower wicks. You cannot call them as rejections. When you have to call the rejection, when prices entered into the zone, because zone pushed the price up, then you got this wick, and that wick is called, should be called as a rejection. You have to say there is a rejection from this zone. Hope you got clarity what is rejection. So this is a good example. See now again prices moving up, moving up, moving up. And finally see here this candle. So went up, went up, went up. How much profit it would have given? This is the zone. Probably I think this is the first demand zone we have drawn in our practical session. The first practicals, I think I have started with gold. That day, this is the red candle you have seen, the drop candle, the bearish candle. After 2 days, we got the entry. After that, see how much profit it would have given here. But you should also observe here, if you look into this entire chart, that is since 2015, you look into this entire chart. And this is the highest value. Let me draw a horizontal line. Now I am explaining one more concept to you here. So this is called all-time high. The stock is at all-time high. When we are saying all-time high, this is the previous. In this candle, it is the previous high, all-time high. Now prices went beyond the previous high. Sometimes you might be hearing all-time high stocks or all-time low stocks. All-time high means on this day, the prices are at the highest of all entire the stock data. If you look into the history, the previous history, any candle you take, compare with any candle, and this candle's price is higher compared to all the previous candles. Maybe for the last 10 years, 15 years, or 20 years, whatever the data is there. And on this day only, the price is the highest compared at this point. The blue color line, whatever I have drawn, at that point of time, this stock is at all-time high. That's why people say, today gold reached all-time high, or today silver reached all-time high, or today Nifty 50 reached all-time high. That kind of news you might be hearing. So this is such kind of example. I'm trying to explain what is all-time high in case if you are not aware. So on the day the price reached highest level for its entire lifetime, that is what? Its entire lifetime of that stock. Today it reached its highest price. That is called all-time high. Next day again prices may go above, further above, or it may go down. In this example, it came down from all-time high. And why I am telling this point, when prices reached all-time high, the stock will not be having any supply zones. Because after breaking all the supply zones only, the prices will reach its highest, lifetime highest value. If a stock reached lifetime highest value means the stock doesn't have any supply zones. That means all the supply zones are violated. After violating all the supply zones only, a price will be reaching all-time high. Similarly, all-time low stocks, if a price will be reaching all-time low after violating all its demand zones for all-time low. For all-time high, it violates all the supply zones. This is the difference you have to understand. See here, this stock is having a supply zone here. So it is violated during this move. Let me draw. And similarly, here is a supply zone. And similarly, here also we have a drop candle and two base candles and a supply zone here. Let us draw. Maybe here also we have a drop, base, drop. See, all these zones are violated by the time it enters into this. So this was the, which is the last zone it violated. Let us keep that. So this is the last supply zone. See how it pushed till our demand zone. Now the demand zone pushed the price. This is the fresh zone before entering into this. This is a see here at this point of time. The supply zone is a fresh zone. Now price entered. It is a tested zone. How it pushed till its next zone. Let me delete even this. The prices went up to this demand zone. That is what happens most of the time. The prices will be moving between demand zone and supply zone because it is already tested. In the second test, see how easily prices went beyond this. Now it is a pierced zone. This zone is a pierced supply zone. Pierced supply zones also you can delete from the chart. I'm keeping only in the charts only because of finding traps. Because you didn't learn those concepts so far, you can delete even pierced zones. That's why I am saying, because this is an all-time high zone and not at a new supply is created, we can say this stock is not having any supply zones. Sometimes you will be finding such kind of stocks. If a stock, if you did not find a supply zone, you can say that is an all-time high stock. The stocks at all-time high, they won't be having supply zones. After that, new supply zones will be created and again price direction will be changed. So this is one important point you have to observe about the gold. So our first stock we discussed itself has given a very good return here. Now, let me show you one important point. It's very important. Probably you haven't learned earlier, but this is the time you have to learn, because you will be in practical charts, you will be seeing such kind of zones. So let me select a stock called HDFC Life Insurance. Look into this. So this candle is looking like a base candle, right? It is a medium size candle and body is less than 50% of the entire range of this candle. See the next candle? Next candle is the small candle. For small candle, you need not even calculate the body. Narrow range candle. This is a medium size candle. Compared to other candles on the chart, this candle is looking like a medium size candle. And body is less than 50%. So can we call this as a base candle? Yeah, at the beginning stage, if you are as a beginner, you will assume this candle as a base candle, but actually that is wrong. This candle is called as a leg candle, and moreover it is a ERC candle, expanded range candle. How can we say it is expanded? Because there is a gap between these two candles. See where price closed in the previous candle? Here. Let me mark a horizontal line. Now you get the clarity. Here prices are closed. Now compare from this previous close. Assume this is the recent candle. From the previous close, see how it moved with the gap it moved. And the gap is maintained. So then you have to consider from this blue color line, you have to consider this entire candle. That means this candle is having an invisible body because of the gap. Let me draw some body. This drawing tool in trading view is not very good, but at least let me put my best effort to make you understand. Until the blue color line, see, from this blue color line, let me till the where the wick is starting until this place. See here. Now how this candle looks like? See the small wick above this. Now is it not looking like a rally candle? Expanded range candle? Now we have a rally candle, we have a base candle, and again we have a rally candle. So how do we draw our zone now? Like this. This is a demand zone. Let me change the color. So we have a rally, we have a base, and we have a rally. This is the way you have to understand. This entire body is called invisible body. You can find such kind, actually you have to assume the candle like this in your mind. When there are gaps, candles will be having invisible body. And remember this scenario. It's a very important scenario. So it is a rally-based rally. At one stage, you thought, let me delete this invisible body. At one stage, we might have thought this is a base candle. But actually, this is not a base candle the moment you consider the gap, this entire gap. So such kind of practical scenarios you have to understand. I didn't explain during your course because I don't want to create a lot of confusion. Now you practiced. Now you are seeing practically on the charts. You have already drawn. Probably you would have drawn. Apart from what I have shown you in the video, you might have practiced a lot by this time. I thought this is the right time to make you understand. This is the right time to explain this concept to make you understand. So whenever there are gaps between two candles, you can assume some invisible body. That way you can understand that candle is really a base candle or it is a rally candle. Not rally. Sometimes it could be drop also. If the gap is towards the downside, maybe that could be a drop candle. So let me use the word expanded range candle or a leg candle. According to our demand and supply zone terminology, a leg candle. You know that leg candle can be used for either leg in purpose and a leg out purpose. So in this example, this candle is a leg candle and we are using for leg in. Sometimes you may see such kind of candles for leg out purpose also. You may see the candle is small candle. You might get a doubt. I might have drawn a demand zone. You might get a doubt. This candle is very small. How can we draw that as a leg out? Such kind of doubts you will get. So at the time you have to see the invisible body. If there is a gap, then we can draw such kind of zones. Look into this. We have a, let me draw, you will get clarity. Let me change the color, supply zone. Okay. In normal situation, you may think this is a small candle. But see the invisible. From yesterday, this is previous candle's close. From here, if you draw the invisible body, let me draw a horizontal line from where you can draw. So from here, if you draw the invisible body, is it not looking like a big candle, expanded range candle? We can use for leg out purpose. So that's why this is a rally base drop. See, next time prices went and tested. See how it pushed the price down. And after that, the prices easily passed this because it is a tested zone. That's why I'm saying in the initial stage, do not take second entry in the zones until you learn the advanced strategy concepts, high liquidity zones. So this is a new learning for you from this practical session. Even though it is a practical session, we are learning some candles with invisible bodies. So here you have seen this candle, you have seen the invisible body for leg in, and in this example, this particular candle is having invisible body as a leg out. I have shown you both the examples with leg in as well as leg out. Here leg in is a rally candle. Here leg out is a drop candle. That's why the pattern is rally base drop. That's why gaps are very, very important. Still, if you have any confusion in understanding gaps, please go through the gaps session. The lesson 6.1. I clearly explained when to consider a gap, when not to consider the gap. 6.2 version, I have explained pro gaps. Novice gap and pro gap. But before that 6.1 lesson, I clearly explained how to consider the gaps between the candles. When to consider, when not to consider also explained in that lesson. So please go through that lesson. And again come back to this chart, HDFC Life. Now you draw the zones without looking into whatever I have drawn, without looking into that. You open a fresh chart. Don't look into this video and you draw on your own. That way practice. That way you will also try to find such kind of zones from some other charts also. Every chart you will find such kind of zones. Institutions are very clever. Sometimes they want to confuse you. If you are not aware of these concepts, you will miss some good zones. See how much good profit it would have given after it just entered. If you are not aware, you would not have drawn this zone. See, price entered, see how it went down. All this is our profit. This is a short trade. What is short trade? First we sell and then we buy. If prices go down, we get profit. If prices go up, you get losses. It is exactly reverse of long trade. Long trade, first you buy and then you sell. But here, first we sell and then we buy. That is a short trade. So whenever prices are go down, as according to your analysis, go for short trades. Whenever prices go up, according to your analysis, then go for long trades. Hope you this concept is very useful concept to you about understanding invisible body when there are gaps between two candles. And look into this example. But anyway, here zone is violated. Let me select a best by looking to some other chart, because so far what concepts we have covered. Fresh zones we have seen, tested zones we have seen, violated zones we have seen. We have also seen zone achievement by violating. We have also seen pro gap. So how to trade with zones? I already shown you examples, given profits, but with risk reward calculations is more important. Then only how to trade with zones will get complete meaning. Without risk reward calculations, there is no meaning in discussing about how to trade with zones. Previous lesson, I mean practical session also, I given one example, but this is the one in all the practical session, at least one example we have to see, because it is such an important topic. Again and again. So let me take a chart, let me find zones having recently good Bajaj Finance, Bank Nifty. Okay, let me take this example. So now we are analyzing silver. Here we have a rally candle. See, this is there is an invisible gap. I mean, invisible body. Why invisible body? Because there is a gap between these two candles. If you draw the invisible body, this is looking like a rally candle. If you don't draw the invisible body, it is looking like a base candle. So that's why whenever there are gaps, you should properly analyze our chart. So we have a rally candle. This is a rally candle, then base, 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 three base candles. So let us draw the demand zone. So I am drawing demand zone with type 2 proximal entry to minimize the risk. So this is, let me change the color, demand zone. And let me draw the supply zone. See, this is a ERC candle. Look into this. This is a ERC candle, expanded range candle. What kind of ERC candle? Failed ERC candle. I explained in the third part of the first lesson. Failed ERC candle. Failed ERC candles can be used as a leg in. You may not be using every failed ERC candle as a leg out. Some kind of failed ERC candles you can use in leg out. That is possible. Those scenarios different that we discuss in the advanced related discussions. But time being, let us use only in leg in. So we have a leg in, we have a base, and then we have a drop. So let us draw the supply zone. Let me change the color, supply zone. Okay, now it is violated the most recent candle, that is on Friday, last Friday. But before that, let us assume, let us take this scenario. So far it is a fresh zone, right? So what is that we want to do? We want to take this trade on silver. What is our target? The supply zone is the target, the immediately available supply zone. The prices are, and moreover, this is a high liquidity zone. Previously, I told you multiple tests it supported. First time, second time, third time. Now recently it failed. That is a different story. Okay, now we want to take the trade. When you want to take the trade, first what is that you need to calculate? The risk and then the reward. What is your risk? So let me select the trend line. This is the trend line. This is the risk. What is the reward? From this zone to demand zone to supply zone. This is the reward. See, this is your risk and this is your reward. So how do you calculate the risk? Because this is a demand zone, the difference of this proximal line and the distal line. Because we are in this example, to minimize the risk, we have taken type 2 entry. What is type 2 proximal line? The highest body of these base candles. We have 3 base candles. Which base candle is having the highest body? The third one is having highest body. So what is this value? The value is, this proximal line value is 69734. Let me take a calculator. 69734. 69734. Let me copy, because again reward also we should use this value. At the time easily we can paste. Okay. So 69734 minus the distal line. What is the distal line? The low of this these base candles. Which base candle is having low? The first base candle is having low value. So minus, what is the value here? Low of this value. See, when I place my mouse, all the values will be displayed here. I am moving my mouse. Hope you are able to see. See the cross symbol. All the values are changing. We have open, high, low, close. So when I place my mouse in any candle, you have to observe the values there. See, now I am placing my mouse in this candle. Now look into the low value. First one is open, high, low. What is low? 68,601. So 68,601 minus 68,601. 601. So what is the risk? 1,133 rupees is the risk. So let me keep the risk in the memory, calculator's memory. Let me click on this M plus. So this value is entered into this memory, calculator memory. Remember, risk is 1133. Now reward, what is the reward? Reward is from the proximal line of the demand zone till the proximal line of the supply zone. What is the proximal line of the supply zone? The low of this base candle. What is this low value? 72984. 72984. Minus the proximal line of the demand zone. We already saved this value. Let me paste. So what is the profit? 3,250 rupees is the profit. 3,250 Indian rupees. What is this reward? This is the reward. How do you calculate your RR, your reward by risk? What is reward? 3250. 3250 divided by, we already saved the risk in the memory, calculator memory. Let me release MR. MR means release the memory from the calculator. 1133. So what is the reward? 2.868 times. Or you can say 2.9 times. Or you can say close to 3 times. Close to 3. 2.9 is close to 3. So you have for one risk, you have 3 times reward. What exactly the meaning? For every 1 rupee risk, you are getting a 3 times reward, 3 rupees reward. Or in terms of dollars, for every $1 risk, you are getting $3 reward. That is what the meaning of 1:3. If you get loss, you will lose just 1 rupee or $1. But if you get profit, you will get 3 rupees profit or $3 profit. That is what the meaning of 1:3 risk reward. For every 1 risk, you get 3 times reward. That is the meaning. Always you have to choose. See, 1:3 is a very good trade, but initial stage, you always look for 1:5 related trades. Why 1:5? After reaching 1:3 reward, you can sell. You need not wait for, because sometimes prices may turn back. That is also possible. See, got the entry. Prices went a little deep and then again turned up. And finally, it reached the target on Thursday, last Thursday. Because this demand is very strong, even the zone is violated. This supply zone is violated. But it reached our target. So how much profit we got? For one what to say, for 1 kg of the silver you brought, you got 3,250 Indian rupees profit you got. For every 1 kg of the silver you brought. Within how many days you got this profit? So this is the trade day, that is 13th, 2nd, 3rd, 4th, and the 4th candle. The first day you bought, 4th day you sold. In just 4 trading days, you have got a profit of 3,050 rupees by using the concept demand and supply zones. Do every zone works like this? You might have observed by this time. If you would have practiced, you might have observed some zones are failed without giving any profits. When prices entered, easily it passed down without going up. Few zones, few demand zones or few supply zones, you might have observed like that. Why some zones are not giving profits, all these things you will understand. During the second phase of your training and third phase of advanced strategies, you get a perfect way of understanding. At least 80% level, the zones that is going to work, you will be in a position to identify. So this is how you trade the zone. Before trading the zone, you need to calculate whether it is having good risk or not. So we have seen how to trade with the zones by calculating the risk reward. Exactly the same way you have to practice. Just drawing demand zone, drawing supply zone doesn't help you. Every time when you draw demand and supply zones, try to calculate risk and reward. It is a simple mathematics. You just take the calculator, the high of the zone and low of the zone, you just subtract. That's it, you are getting risk. Similarly, the high of the supply zone and the low of the supply zone and the high of this demand zone, you subtract, you are getting reward. And reward by risk you will be getting like 1 is to 1 or 1 is to 2 or 1 is to 3 or 1 is to 4 or maybe 1 is to 2.3 or 1 is to 3.5, whatever the value. You just note down every time when you calculate, take a paper, note down the name of the stock and note down what is the risk, what is the reward, and what is the ratio, risk reward ratio, 1 is to 2 or 1 is to 3. And what is your entry value, what is your entry value, what is your target value, and what is your stop loss value. What is your stop loss value? If it is a demand zone, the low of the demand zone, that is the distal line. The distal line is the stop loss. In the next training program, you will be learning stop loss buffers. After that, you will add some more buffer below this. You will understand once I explain in the second phase. But time being, your distal line is the stop loss. And what is your entry? Maybe type 1 proximal line, or if you want to reduce the risk, type 2 proximal line, or if you want to further reduce the risk, type 3 proximal line. See, if you want to assume if your risk is very high, what you do? Go to type 3 proximal line. So this is the type 3. Now the risk is reduced. Let me see here. Now the value is changed. Now your reward is increased. See how much reward now? Furthermore. But unfortunately, what happened? You just missed the entry. Maybe just a few points before this type 3 proximal line, prices again moved back. In case some more points if it came down, you would have been a more lucky person. You would have got a trade and your risk would have been very minimal and your reward could be even more. Maybe it could be 1 is to 7 or 1 is to 8 compared to this risk and reward. You have to do all these calculations before you accept the trade. For type 1 proximal line, what is my risk and reward? For type 2 proximal line, what is my risk and reward? Type 3 proximal line, what is my risk and reward? You have to do these calculations. They are simple calculations. Or take an Excel sheet and there you note down these calculations. That is also you can do. Instead of paper, you can keep them in the Excel sheet. Whichever the method you feel easy or convenient to you, you follow. But until you get good comfort about the subject, you practice. Believe me, by practicing only you get lot of perfection on your subject. Just listening the videos and not practicing, you won't get success. My video should be your reference. My video should be to make you understand the concepts with clarity. But to remember the subject, just listening the videos is not sufficient. For remembering the subject, you should keep on practice. I have given only 1 month time for you for practice. Some people will take 3 months time or 4 months time just for practice purpose. Because I explained all the fundamentals at the best level. I thought 1 month is more than enough for you people compared to the other people. Most probably from the first week of our December, we are going to start our second phase of our training program, our free training program. Okay, hope we had a good discussion. Hope you also learned some new points like invisible body when there are gaps. You have also seen how some zones are supporting multiple testing. See, even this zone, first test supported, second test supported, third test supported. But don't go for second trade or third trade because unless you are aware of these advanced concepts, going expecting a second test, third test is a high risky. Don't go for that. Time being until you learn the advanced concepts, that is until you complete the third phase of your training program, your goal is looking for only fresh zones. After that, you look for high liquidity zones because they give more profits. And the next session, let us practice some more stocks, some more trades with the risk reward calculation. And mainly we focus on the trend calculations based on the zone violation. So those examples, let us look in our next session, and also we will practice all the concepts so far you learned together. Some examples also we will see. Whatever you learned from all these 8 lessons and these 3 practical lessons, whatever you learned, everything we combine and we will practice. Most probably your next video is going to be the final video for this practice session. And you will also be having one more video, that is a 10th video. There you will be knowing it is like a more about a motivation session. Because how you should learn, what you should not miss, how you should concentrate. Because in case if you didn't attend certain videos properly, still you have time till the first week of December. And also I will explain about my profile also, because many people don't know about my experience and my skills. So probably it is the time at least you should know. So all these things we discussed in our last video of our phase 1 training program. So you will be having 2 more videos. One video is the last practical session, and one is a motivational session, including my profile, explaining about my profile. So I hope this video, the information in this video is helpful to you, and I'm also sure you learned few new topics in this video, especially about some overview about high liquidity zones and candles having invisible body when there are gaps. So let us meet again in our next video. Thank you.